Good morning, this is Daryl Lane, your vacant trader, and we are tuning in for Monday's session to kind of see what's going on in the market. Today's going to be a specific recording of our trading journal series, which is basically just me journaling my daily trading routine and looking for some sort of opportunity in the market. I'm going to be doing this about 3 to 4 times a week, just as a follow me in every sense of the word. So we're going to get started right now. Today's goal is we just came off of Sunday's opening session. Today is July 19th. So specifically the goal is just to see if there's any opportunity in the market. A lot of times on Mondays it's super choppy, a lot of craziness going on, and we don't typically find opportunity. And if we do, it's normally the market goes the other direction. So right now we're just looking to see if there's any opportunities today for us to hop in and see if we can catch any pips. So the first thing that I do when I wake up in the morning, I do my 5-minute meditation, just something to get my mind calm and ready to look for opportunities without trying to force an opportunity to come. For me, the overall goal is for the market to come to where I want it to go, and not for me to try to move myself to the market to look for an opportunity. Patience is everything. So right now, that's what today's going to probably be like. We're going to start with looking at the economic calendar. We're looking at myfxbook.com, and this is how I do this just about every single time. So we're going to be looking on myfxbook.com, looking at the economic calendar. So for Monday, July 19th, there's not a ton of economic data being introduced today. There's some stuff coming out with the Japanese yen, but that's about 14 hours from now. There is also something that came out for the Haskell, which is some Bank of England team member in the Monetary Policy Committee. So they're actually going to be doing a speech in about 40 minutes or so. So that's going to be something to pay attention to, see if it has any movement within the market. I also go into marketmilk.baby pips, which is just a way for me to get a quick little overall snapshot of what's happening within the pairs that I plan on trading. Okay? So for me, I like to go into the watch list overview, and I'm going to choose a watch list, which I like to look at the GBP pairs. So that's what we're going to do right now. GBP pairs, so we click there, got it. And this part of the website's a little annoying because it does it every single time, I'm assuming, if you're not logged in. And this is just going to give us an overall snapshot of which GB pairs have moved and how much they've moved in the past day. Alright, so we're looking at the strongest moves, which we had a GBP CAD had a 137 pip movement, and then we had GBP JPY had 114 pip movement to the downside. Now I trade one pair and one pair only. There's a lot of people who have different ideas about, do you trade multiple different pairs? Do you just trade one? I honestly believe that from what I've seen in the market, you can find one pair, trade the one pair, you can get used to that pair's movement, the wicks, how things happen, and you can master trading just one pair. Now, I'm not saying I mastered GBP, JPY by any means, but there's a massive comfort difference between trading one pair or having multiple different pairs. Now, I think for sure maybe 3 pairs is good to have. You might have your main pair, then a secondary pair if for some reason, that day of trading your main pair is just choppy, not having a lot of movement, and then some sort of indice. I think that's a good idea. So technically, even you could do it at 4. You could have your main pair, some sort of a metal as your secondary pair, some sort of a metal, gold or silver, and then some indice, whether it's NAS 100, S&P, or US 30, so something like that. So I'm looking through here, and typically I'm just seeing the overall movement, so I have to look for what I'm looking at. Go to Reuters. Reuters is a good overall way for me to kind of just see what's going on politically, economically, when it comes to each of these different countries that we're looking to trade. So London ended the COVID restrictions, which this has been something that a lot of people have been looking for a long time. But we have to see how does this affect the actual economic outlook. We're still trying to figure out how to establish more trade with developing countries and different things like that because of Brexit, which was basically the UK leaving the Euro, the European Union. So there's some things around there that we're looking at. Looking for something else, anything that's just really stands out as a huge positive or a potential negative headline. Then I want to look at United States because the US dollar has a huge weight on all major currencies. So hopefully everybody gets an opportunity to see this, have a good weekend. Me and the missus, we went to a beautiful park nearby, huge nature space. We probably did like about a 2.2 mile walk through the woods. Really nice time to just get away, get our brains out of our devices, and reconnect with nature, which I always think is a good idea. So right now I'm going to go to the markets page as well. I'm going to specifically see if it gives me a drop down for my currencies. Look here, see if I see anything. This article on news related 6 months, 4 months. I mean, it doesn't seem like they've been updating Reuters lately, so I might have to make a switch to a different site. Forex Live is another one that I recommend. They do a good job with a lot of information. So I keep getting alerts, so my video keeps getting stopped out here. Treasury yields coming under pressure in European trading. That's interesting. So yields affect currency. So yields are up, currencies are up. Yields are down, currencies are down. So bear with me here while I'm just reading through. This is live. We're live looking for action. It's going to help us have a better idea of what's potentially going to happen in the market. Alright, what happened with the CAD? Some news happened with the CAD. So dollar advances to start a European market trade. which we know that the GBP has been on the downside because last week's trades, majority of them were settled. There were a couple that were trades that were retracements, but for the most part, we were looking for sells all week last week. So right now, we're just trying to see if there's anything else with the GBP that we can look at. Okay, coronavirus frontline staff may be spared from pandemic. And I try to typically look at a lot of this news on Sunday, just because I think it's good to have an idea if there's any articles introduced before the opening of the market, which on Sunday, 5 p.m. Eastern time, the Forex market opens back up. Markets, we'll go to currencies, Forex rates, we're just looking for the GBP, JPY. Let's see here. Close this out. There we go. Sorry, my eyes are a little rusty this morning. So the cool thing about investing.com, which is set wrong right now, it does give us a little bit of technical data, which helps with our overall bias. We're not going to use this information as it's everything, but it does help out by seeing what's here. So the monthly right now, like I said, it's the 19th. Monthly's neutral, strong buy. Weekly, neutral, strong sell. And the daily, strong sell, strong sell, strong sell, strong sell, strong sell, all the way through down to the 1 minute where we start to see a little difference, right? But we don't really trade the 1 minute. You can use it as a last minute check before looking in on an entry. So we're gonna go to news and analysis, see if there's anything that's talking to us here. JPY bearish impulsive themes to 151 on concerns over UK's freedom day. Drops for the 5th consecutive day. Fresh 1 week lows. Caution on months. Wait. Nice little so. Alright. So GBP JPY. Slippery ground. My expectation is that from last week that we're still going to continue on the downside, but it is reaching a potential weekly bearish order block. So it'll be interesting to see how it reacts. I'm sorry, bullish order block. So it'll be interesting to see where it reacts to that. And a bullish order block, best way to explain it would be is when the market is at a specific area of support. The market breaks the high of that area of support, comes back down into that area. If we see it come back down into that area and reject, then we're going to see it continue on the upside if the market is still holding into the positive momentum and direction. British pound showing signs of support, so this is kind of reinforcing what my thought is. Because the overall trend of the British pound is technically up because of looking at the weekly and the monthly, but we're we're seeing some pretty strong retracement, which a retracement is simply meaning the market is headed in a certain direction. It has a temporary reverse and then continues the same direction. Bounces continue to So we're going to TradingView. TradingView is a site that I use for my markups and looking at the actual market. Some people do it directly from off of their MT4. I do not. That was a simple alert that I had set for myself, recording here. Alright, so I always start off looking at the monthly, which typically, because the monthly is such a long time frame, this would be the monthly. This candle right here. So I was looking for, this is what I meant by order block. So you have an area of support. The market goes up about 3 times that area. 1, 2, 3. Back into that area. If this doesn't break here, this could be the potential for a continuation of that. That's what we're waiting respected on the daily. This is an order block on the daily. Market came up here, created a high. Trying to come back down and create a low. This is kind of our range. So if we look at the weekly range behind. Is a price in percentage. It's what we are looking for to be able to calculate the profits from the move. So last time market came up, today it came down, we tried to bounce all the way up here, came here, now came back down to the center area or zone. So then we're looking to see a bounce here would be great. Just don't break here. If it breaks here, we know we're continuing to the downside. So we are currently still in London session, which goes from around 2:30 a.m., 3 a.m. crosses into New York session. What type of indication is coming us. If we're still looking at continuation to the downside, because technically we're in a downward trend, we need to see rejection somewhere around here or somewhere around here before it continues to go down to that middle area that I mentioned. So that's what I'm currently waiting on right now, is some sort of indication that so what I'm looking for is either on a 4 hour or 1 hour. I need an indication that the market is continuing to the downside, so we need to see a rejection. Once we see that rejection, we would look for a pattern to indicate an additional confirmation. So that pattern would be a bearish engulfing pattern, something of that sort. So that's been our morning so far. I'll continue to keep you updated as we go through the rest of the day, but